The idea of these classes is to have a more interactive class. So my hope is that I speak less than other classes, and you take the lead of the class, you as a group, okay? Today is a bit different because I have to introduce some information regarding the project work. We will probably form the groups, the teams for the project work in a week. Because at the moment there are still some changes between group 1 and group 2. And so we have to fix the two groups before, and then we will form the teams. Each team will be composed by 5 students, and randomly chosen by Luigi Marini. The task of the project work is, as I told you last week, is to prepare a financial report of a company. We also assign the company. And during these meetings together on Tuesday, when there is the split classes, we focus mainly on the project work. So we will do step by step how to prepare the project work. The first classes will be more, let me say, technical in the terms of how to prepare the Excel file. And then the last classes will be more for the interpretation of the data and of the information. Okay? So, as you have seen from the detailed program, today we work on the FILA case. This is the MyLewis platform. In the FILA case, you find the data of the FILA case in the case study directory. So if you go there, there are several documents. There are the 3 annual reports. If you have problems for registering the presence, just tell me your name and I will record your presence. Okay? For the 2 guys.
No, I did it.
Okay. So there are 3 blocks. The annual report of the last 3 years, the Excel file, and the Excel file is what you are asked to prepare for the project work, and then some additional information that is useful to understand the business, understand the strategy, understand the main events, etc., etc. You remember the first class. So the technical analysis, the analysis of the number is one part of the fundamental analysis. So this set of information is useful for understand the business, the strategy, etc., etc. How many of you have already worked on real numbers, real cases in financial analysis? Okay. First of all, I would start from the technical part, so the Excel file. How to get the data? There are 2 approaches. The first approach is we open the annual report and rewrite down all the items, etc., etc. It's very long, very risky because you might do some mistakes, etc., etc. The other approach is to download the data from a dataset. We follow this second one. I show you how to get. And you don't have the password. You have to go to the Aula Informatica, the computer room, and you will, or to the library that is close to the Aparenzo, and access and download the data. I'll show you how to get it. You go to the electronic resources of the library. Okay. So it's biblioteca.luis.it/en/electronic resources. And search for LSEG workspace, that is the former Refinitiv. So you click here, and there is some information regarding how to assess the content and how to assess on access to the database. And there is the link here. You will be provided with a username and the password. That is the username and the password available in the library. And then you sign here. This is the main video of the Moncler company. Now I show you only how to get the data. I don't want to show you all the different contents of the database. Otherwise, we spend more than 1 hour just to present what is in the what you can find in the database. You write on the search window the name of the company you are looking for. So in this case, Fila. And here there are all the results that contains the word Fila. Here we have the Fila Fabbrica Italiana Lapis and Nattini. So I click here, and we open the main window for Fila. Okay? So you get information regarding the business, regarding the news. This is the price performance in relation to the market. The white line is the market, and the blue line is the company. So the company is not performing well compared to the market. There are some information regarding the fundamentals, some gross margin, operating margin, net margin, etc., etc. There are the recommendations from the financial analyst. FIRA is followed by 5 financial analysts. 3 suggest a strong buy, 1 suggests buy, and 1 suggests hold. Okay? So if I look this, I say that, oh, probably the company is at the moment undervalued, right? Because financial analysts suggest to buy. Here we have other information regarding the estimates from the financial analyst about the fiscal year and regarding the EPS, earnings per share, regarding the revenues. If you go and want to know the meaning of an item, just move the small hand close to the label. There is a question mark, and you click on the question mark, and there is the explanation. Okay? Again, I don't want to enter explaining item by item because otherwise we spend all the class. What is important for us for retrieving the information, for downloading the information, is this line of the screen, in which there are several menus. Overview, this is the overview. You can also personalize. But okay. These windows contain detailed information regarding the news and research. So it goes in detail in explaining this section. Price and charts, this part. Estimates, this part. Financials, the fundamentals. ESG, environmental, social, governance. Events, this here. Information about the ownership, peers, and valuation. What are the companies that the database finds, for example, to conduct a multiple analysis? The peers. Okay? So, we go to the financials, because from this we can download the financial data and get the raw data from which we start our formulation. So we click on financial, and we have the content of this sub-window: financial summary, income statement, balance sheet, cash flow, operating metrics, segments, pension, real estate investment trust, valuation, earnings quality, RCF landing page. So we go to the 3 main documents: income statement, balance sheet, and cash flow. So I click on the balance sheet. Here, you have the content of the balance sheet. And on the left, you have the options. So the currency, the scaling in million. I suggest to use million or thousand, depending on the scale of the company. Number of periods, last 5 years. We could use 3 years. The source document, finalized or preliminary. We use finalized or preliminary. The statement include partial. They display the orders of the newest and the oldest. The original versus restated. We use the original. Hide unpopulated rows, yes. Hide FCC code. Don't ask me what is FCC code. There are several levels of detail, and we use the highest level of details. Otherwise, we have only, for example, cash and short-term investment, and we don't have the detailed cash and cash equivalents, short-term investment portion. So we choose the highest level of detail, and we choose the consolidated financial statements. We use only the consolidated financial statements. The period is the annual, is year, is the annual, and the view is year-on-year growth. In this case, you have to select the company specific. There are several options. The company specific means that they get the data directly from the annual report. So yep.
In Jim, you could also like a platform for that, for the official, which is approved by the auditors.
Yeah.
You also like to work that version, or is it that in the general report from the company that has not been changed?
No, it is the version. So there is the finalized or preliminary. Okay, that I mentioned before. The finalized is the documents approved by the annual general meeting of the shareholder. So these numbers are analyzed also by the external auditors. Preliminary, it could be that the situation in which you have the management reports, okay, or numbers disclosed that are not yet approved by the annual general meetings, by the shareholders, and therefore analyzed by the external auditors. In the company, so we have four options: company specific, standardized, year-on-year growth, and common sense. The company specific, they copy the numbers from the annual report, what has been approved, into the database. So you should find a match. You should find a match between the numbers that you find here and the numbers in the annual report. Standardized is another approach because in this case, each company might have different accounts. Okay? And in the in the company specific, you have represented the specific accounts of the specific items and accounts in the balance sheet data set. So if you compare two companies, the two companies might have adopted different list of accounts, and so you cannot compare them, the two companies. If you go to the standardized option, it means that these numbers, these items, have been modified by the database into a defined list of accounts. So if you have to compare 5, 6, 10, 15, 20 companies, the right way to proceed is to download this data according to the standardized option, because it means that all the numbers, all companies are, all the financial statements of each company are represented according to the same list of accounts. Okay? And it is easier to compare different companies. But for the analysis of a single company, you have to adopt the company specific. So company specific, statement complete, finalized, last 3 years. When you have set up all the items, all the criteria, you click on update view, and now you have the numbers. We write not in millions, but in thousand. Okay? And this is the data, the set of data. And so there are the specific items of the balance sheet. And if you go to each item, so for example, equity accounted investments, you have the question mark here, and there is the explanation. The explanation not necessarily comes from the annual report of the company. Okay? Not necessarily. I am not sure that the explanation that you find here is the explanation that you have in the annual report. To download the data, simply click here on the icon of Excel. And you can choose what you want to export. Okay? Balance sheet, income statement, cash flow, etc., etc. Okay? Once you have done this, I want to show you other. No, now we stop here. So we And what you have downloaded regarding the income statement, the cash flow statement, and the balance sheet is in the fila underscore 01 underscore row dot XLS. And this is the file that you have. Oh, yeah, I have. Yes. So this is the Excel file. This is the Excel file with the data downloaded from the Thomson Eikon, the Refinitiv database. Okay? This is what it looks like. All the items. And now you have these items for the balance sheet, for the income statement, and for the cash flow statement. Okay? Now you are ready to prepare the annual, the reformulation of the balance sheet. To proceed with the reformulation of the balance sheet, you look at the different items of the balance sheet, and each item in the balance sheet must be classified according to the different 5 categories that we have seen yesterday. So net working capital, net fixed asset, net financial position short term, net financial position long term, and okay? So our task is to classify these 5, each item into the 5 categories. How to proceed? The simplest way is, okay, I read total property, plant equipment, net. Oh, this is net fixed asset, so I write okay, it is operating, it is non-current. This is the, let me say, a critical approach to the reformulation. It might work for some items. For PPE, for PPE, I am pretty sure that it works. It works because it is clear that property, plant, and equipment are related to the core business. And it means that we do not need to go into the annual report and look for information inside the annual report. For other items, it might be useful to, or it is necessary to look at the annual report to understand the meaning of the item. For example, buildings. Are we sure that all buildings are used in the core business or not? For example, we could have the old headquarters that is not more used, and but the value of the headquarters, the accounting value of the historical value of the headquarters is still in our financial statements. But it is not an operating activity. It is not an operating asset. It means that for some items, we need to check in the annual report to understand the content of the item. We go into the annual report. We open the annual report. And we search the word building. And we have some tables explaining the let me find so in the consolidated financial statement page 190. So here we have intangible asset, property, plant, equipment, biological asset, non-current financial asset, equity accounted investment. So we look at, for example, the note 2 as the information regarding property, plant, equipment. For us, some interesting information might be in the equity accounted investments, and to understand what are the biological assets. Because equity accounted investments, we are not sure if these investments must be classified in the operating part or in the financial part. You remember the example that we have done yesterday. To understand better this item, we go to note 4. And then we go to note 11 to understand what the biological assets are. So note 4, we scroll down. and we look for the note 4. This annual report, it is not well prepared because there is no indication of not 1, not 2, not 3, etc. So we have to check here where we find information of the data. Equity, this is the explanation of the criteria adopted. So, equity accounted investees. Associated are entities in which the group exercises significant influence on the financial and operating policies, although not having direct or joint control. So it is not in the consolidated financial statement, but it is represented with the equity stake. Significant influence is the power to participate in the financial operating policy decision, however not exercising control or joint control. So this is the explanation why these companies are not consolidated into the financial statement. And we have represented this company as an equity investment. But if we want to understand the number, we have to go to the, what is in Italiano, nota integrativa, so the notes. And look for the explanation of the content of the item. So here we find note 1, intangible asset, note 2, so this is all the information regarding intangible asset. Note 2, property, plant, equipment. Note 3, then we have biological asset. We go back to biological asset later. Note 4, equity accounted investments. First of all, in each note, usually there is a table explaining the dynamic of this item during the year. And the explanation. Equity account investments amount to euro, yeah, blah, 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 blah. Refer exclusively to the investment held by FINA in the associate DOMS Industries Limited. Our question is, but is this investment related to the core business or not? The explanation, this is the explanation of the accounting data, and we do not have any information regarding the DOMS company. So we are still not sure that this item should be classified into the operating or into financial. Because we do not know. It is very likely because in the explanation they explain about the acquisition of the company, the purchase price allocation of the company. Probably from this acquisition there is also a goodwill, etc., etc. But for the information that we have, we are not sure how, if we are not sure if this company is operating or financial. Okay? So this investment is operating or financial. But this is the annual report, the main source of information. We have two options. One option is to remain inside the annual report and looking at other sections of the annual report, not the notes, the nota integrativa, but the management discussion and analysis, the relazioni sulla gestione, or operating financial review, it depends how it is called. The section of the annual report in which the managers explain the event, the main event of the year, and they explain the business, they explain other, they explain the results, etc., etc. If we find here information regarding DOMS. There is another option to search information, is considering, if we consider the information released by the company during the year. So the press releases. So we go to the press release, and we knew that DOMS is located in India, and there are, I have downloaded this, but if you go to the investor relations area of the annual of the website of the company, you find all the press releases. I have downloaded some of them here. And these press releases contain information regarding the business in India, so this press release was issued at the beginning of the year 2023. FILA continues on its growth trajectory in India, reflecting the strength of the strategic decision made in 2012 to invest in this market. With more than 350 million children under 14 age category, a population of nearly 1.4 billion, blah, 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 India is a key strategic market for the future growth of the FILA Group, which it entered in 2013 through the company DOMS Industry. So DOMS is the company affiliated to FILA that operates in India. Okay? So FILA has a minority shareholding in DOMS. That is the company that operates in a strategic market for a company. So clearly, this equity investment is operating. Okay? And now we have the information. The group, and this is the history, the group has been present on this market since 2012 through the company DOMS Industries, of which it first acquired 18.5% with an investment of 5.4 million euro, when the company had a turnover of around 10 million. And since 2015 has increased on stake at 51%, consolidating it completely. Following investment of euro 36 million when the company had a turnover of around euro 42 million pro forma. And then, because they are explaining another operation that they want to do with DOMS, and then they explain the strategy between this development of the new market and they explain the characteristic of DOMS, because what now we should ask ourselves, what are doing F.I.L.A. with DOMS? F.I.L.A. as a shareholder wanted to make an IPO of DOMS in the Indian stock market. In fact, we have 3 different press releases in which they explain the IPO operation of DOMS. Okay? And that's the process. So you go to the financial statements, and going to the financial statements, going through the items, you discover also the strategy of the company. Okay? You have understood that for F.I.L.A. India is a very important market, and that you discovered that F.I.L.A. is present in India through an affiliated company. Okay? And this is from a technical part, from the bottom, from a detailed information. There are other, for example, other items that we didn't know the meaning in the annual report. The other item was biological asset, right? You remember? There is an explanation of, there is an item biological asset. What could be a biological asset? Any idea? What is a biological asset? And what is the meaning of F.I.L.A. Just an explanation. I apologize. I give this as but for us as Italian, F.I.L.A. is a well-known company. F.I.L.A. produces pencil. Pencil. Okay? something that you... Debattite.
Ma c'è anche fila dei vestiti, non so che è la stessa.
Yes, but this Fila, you remember the name of the company? Fila is Fila is the name of the company is Fabbrica Italiana Lapis and Affini. And lapis is pencil. And probably pencil is something that you probably you didn't use, of course, or maybe in the primary school. Okay, some with the wood and something black, the carbon inside, and you write on the paper. It's like this one without technology. Okay, and. I was born in 1967, and I remember that I used the pencil, with the black pencil and all the colors, the red, and I paint, I drew, etc., with this painting. Something different from the technology that you know. Okay. Yes. And okay, so this is Fila, okay, and it is clear that, and then you explain. It is the strategy is explainable, because now in Europe we use the technological pencil, right, and no more the old-fashioned pencil with the wood, the carbon, etc., but now this is why they focus on the Indian market. And you remember the explanation of the starting point of the press release? The press release was the Indian market is with more than 350 million children in the under 14 age category, a population of nearly 1.4 billion and more than 3.4% of GDP invested in education, India is a key strategic market for the future growth of the Fila Group. Probably because I don't know how many of these 350 million children have an iPad. Okay? The vast majority of them uses the old-fashioned pencil, the old technology pencil. And this is why they see that market as a key market for the company. Okay? So now we have the business. We see that probably this business in Europe or in the more advanced countries might have some difficulties because of the substitution effect of the new technologies. And so they focus on the developing countries in which there are a lot of demand for this type of products. And so we start to understand the strategy. Okay? The role of this market in Europe, the role of this market in other countries, and why the company is focusing on other markets. And now we have to look for information regarding the strategy. Where? In the annual report, basically. But in other documents released by the company, in which they explain also the strategy of the company, the outlook for the company. And again, the source is the different press releases. The press releases can be classified into different categories. One category is the typical press release that to explain the financial results. So the board of directors approved the preliminary numbers of the fiscal year results or the quarter result of the half annual result, and they communicate to the market the numbers. But they don't simply communicate, disclose the numbers, but they also explain the numbers. Why we have an increase of revenues or a decrease in profitability, etc., etc. These are press releases in which they explain the financial results. And these are the last three press releases that you see in the list, in which there is the press release explaining the annual report 2023, and they offer an outlook of the results of the 2024 year. The explanation of the first three quarters of the 2024, and the press release regarding the explanation of the 2024 annual report and the outlook for 2025. We will go back to the analysis of the press releases at the end of the course. But what I want to focus on here is not on the content here, but is on the fact that they present the financial highlights, so the main numbers, and they describe the dynamic of the numbers. Some intermediate result, and they explain the different numbers. What is interesting for us is not only the explanation of the numbers that you might use for your analysis as well, but is the outlook. Because in the outlook, they explain the strategy that the company is following. So the group's economic growth in the coming months is expected to be driven by performance in the United States, business expansion in the Central South America, and continued recovery in Europe. In the United States, the trade tensions triggered by potential increase in tariffs are creating market uncertainty. At this stage, it is still too early to estimate the potential impact of tariff increases for the FILA Group, and the situation is still in flux. However, in this context, Fila Group, thanks to its global presence in production facilities, is well equipped to minimize the negative impacts of tariff increase. It means that if Fila Group has a plant in Mexico, they might export to the US from the Mexico directly, and not from Europe. Okay? So it means that probably the effect of the tariffs will be limited because of the international presence of FIFA. And look at this part. This part is an interesting part because it explains what Fila is doing to recovering efficiency. In the coming months, Fila Group will continue its organizational efficiency project aimed at cost reduction, which will develop over the coming years, along with operational and process optimization initiatives. These reorganizations, already initiated in 2024, will enable the group to face with stability any potential decline in consumption resulting from US government's tariff decision against countries such as Mexico and Canada, which may negatively impact these markets. In Europe, the reorganization effort are delivering good results, allowing blah, blah, blah. The Indian market continues to be particularly strong, with DOMS growing at higher rate than competitors, leading to positive expectations for the year's results. Here, you find the main strategy that the company is following. Cost efficiency, reorganization, and strong attention to countries like the US and India. So it helps to analyze the context in which the company operates. Okay? You should go deeper, you should go in more detail analyzing these items to have a competitive framework in which the company operates. We go back to the biological asset, right? So for this company, what is a biological asset, in your opinion? Yes?
Trees, plants, whatever.
Sorry?
Trees, plants, everything biological, animals are.
And what is the meaning for, so trees, plants, other ideas? Wood. But in terms of living woods or wood?
Maybe living, something that we can use to produce our things.
Wood. So the inventory. And why it is not an inventory? Because if I have tons of wood, I say, okay, it is inventory. Why it is called a it is biological asset?
Maybe they have the forest.
Oh.
They purchase the forest in order to grow the wood.
Your name, please.
Oliver.
Sorry?
Oliver.
Oliver. As Oliver said, so it's something that is living, right? They purchase a forest. They have trees. In this term is biological, because it's something that is not that. It's not like the wood that we have in our inventory. Otherwise, it is inventory. Okay? And I've seen also. Okay?
Yeah, I wanted to say plantation. In the annual report, you mentioned plantation very
Yeah.
increase, so.
plantation.
Or they
Yeah.
own something like subsidiary.
Yeah. Did you find this information in the
Yeah.
annual
Social
report?
network.
In the annual report, they explain in the. Let me go to the notes. They exclusively refers to the fair value of the tree plantation of the Chinese company. Sorry if I don't pronounce correct. Xinjiang. Xinjiang. Phila Dixon Plantation Committee in accordance to the International Accounting Standard 41 biological asset. So there is a specific international accounting standard that refer how to account for a biological asset. Okay, so there is not a historical cost, there is a fair value analysis regarding the biological asset. But again, there is the explanation of the role, of the meaning of this item, biological asset. Okay? And then there is the note. Okay? But this is important because, for example, in the luxury company, you find an item called key money. Okay? And this key money is an intangible asset. And if you don't go into the notes and understand what key money represents, you might classify this key money as a financial asset, as cash. Okay? So please give a look. This is an important advice. Give a look to the specific content of the balance sheet, and using the information, you might classify this item according to the different types that we have defined yesterday. Operating short term, operating long term, financial short term, financial long term. It is clear that you should focus on some of the items. So for example, leasing, biological asset, equity associate, prepaid expenses. There are some items that are more critical in understanding if they are financial, if they are operating or not. But looking at the annual report, you might have also information regarding the strategy and the content. So it means that reformulating a balance sheet, reformulating a financial statement is not a matter of sort of ticking the box, right? This is operating, this is financial, this is operating, this is short term, this is long term, etc., etc. But you have to go inside the meaning of the item. Otherwise, you face the risk to have a misleading information regarding the meaning of the item. Okay? Short break, 10 minutes, and then we start with the reformulation and with a question that we left open yesterday.
The question, domande che hanno fatto ieri.
Oliver, right? Yeah. Could you tell me what is the raw balance sheet and the reformulated balance sheet, because I don't remember exactly the numbers. receivable
1,000.
1,000. PPE 5,000.
Cash
Cash and cash equivalent 10,000. Okay. Accounts payable 6,500. Loan 9,000. And equity is 500, right? This is the balance sheet prepared according to the international accounting standards. And now we have the reformulated. So we have account receivable 1,000. Account payable 6,500. And PPE is 1,000. So our net operating assets is minus 500, right? We have cash and cash equivalent is negative 10,000. We have loan 9,000, and we have equity 500. Capital employed. Okay. If you remember, we started from this, the first one, saying that there is a significant amount of debt because the ratio asset over equity is 16 over 500 and 32 times, right? So if we look at the numbers from the International Accounting Standard, we present a situation in which there is a very, very high leverage. The company is significantly risky because of the relationship between equity and asset and equity and debt. Because we consider together the different types of debt. We not separate between debts related to the operating activity and debts relating to the financing. Okay? This is the first approach. I told you that these can be very misleading, right? Why? What we know, what can we say regarding the financial statements, regarding the solidity of the company, if we look at the balance sheet reformulated according to the other perspective, the managerial perspective? First of all, we have to understand the meaning of this negative number. What does it mean that the invested capital is negative? Your name, please?
Federica.
Federica.
It means that basically shareholder have invested nothing. So basically, banks and are the real owners of the society, of the company. So for that, for example,
In this view,
yeah. Because, for example, if the cash or the credit decrease, the company will have trouble to operate. So a stronger equity base is needed to ensure the financial sustainability.
also in this case.
I thought
But
so.
my question is, why? What is the meaning of a negative employed capital and negative capital invested?
They do not have, they have more. So looking for,
Your explanation is still related to the first one.
so you want to know why also the.
What is the meaning of? What is the meaning of a company that is an invested capital that is negative?
They do not have the financial resources to cover it.
But it is negative. What I have to cover, it is negative.
Yeah. I'm thinking about that because I'm still thinking about the first case.
Yeah, you are still considering the first. Forget it. What does it mean that, look at this part only. What does it mean that this 500 is negative?
The variables are more than the receivables.
This is the mathematical explanation, right?
Of course, yeah.
But the economic explanation of this minus 500,
If the company is relying more on that. But I don't know why.
Maybe that the company
Your name?
Ludovica.
Ludovica?
Maybe that the company is not using its own resources, equity, but debt.
Okay. Invested capital. It means the amount of money that the company has invested in the core business. Okay?
So they are still using that.
I make an example to clarify this to all of you. Okay? So, we buy a company, purchase a land in which the company wants to build a new plant. Okay? So, I buy the land. So, in my financial statements, I have land, N, okay? And on the other side, I have accounts payable. N. Okay? So we have an asset, operating asset, and we have an operating debt, right? How much money has the company invested at the moment? For this, and has invested?
Oh, no, zero.
Zero. Invested capital. operating asset minus operating liabilities. Investment is associated to a cash out. Has the company cash out? No. The investments are zero, right? Then the company pays 7. Okay? How much money has the company invested right now? Capital invested. Okay? We still have a debt, right? Because we have a debt here of 10, and we have a debt here of 10. Right? Because we have accounts payable and loan. They are both debts. Or better, they are both liabilities. But in one case, the liability is operating, and in the other case is operating and financial. So in this case means that we didn't have invested. Okay? We had not a cash out. Okay? In this case, so no investment. In this case, we have a cash out. We have invested 7. And who are the providers of these 7? Bondholders. Okay? This means the amount of money invested. The company has not yet invested money because all the net investments have been covered by the suppliers. It means that the company does not need to be financed because the suppliers cover the needs of the company. Okay? Ask me.
What about?
No. Do you have a question?
I don't know. I was just translating my mind from the bachelor lesson, and I just.
You have forget the bachelor lesson because the perspective is completely different.
No, I know that. Okay, I already figured out.
Okay, the perspective is completely different. They use a static view. We adopt a dynamic view, and we will see the dynamic view later on.
This is just the CIN, Capital Investito Netto.
This is the Capitale Investito Netto. That represents the amount of money that the company has invested. Capitale Investito.
Yeah, okay, just figure it out.
Okay? And what this minus 500 means? Negative equity? No, oh God, negative equity is like a devil, right? Federica?
Oh, okay.
Yes.
Just the same from the. It's about the capital invested. Not invested.
What is the meaning?
employed.
What is the meaning? Minus 500.
The capital employed is negative, so about the net financial debt and net financial.
Do we have that?
No.
No, we don't. We had 1,000 cash, and we had 1,000 cash and 500 equity. So, therefore, it means that the shareholders have put money on it, okay? But the availability of cash is higher than the loan and the debt. It means that the company has a lot of resources to invest in the business. The company has no debt. For us, a debt is a debt with a financial institution, because the operating debt will be repaid through the revenues and the costs. Why we separate? Because through the operating activity, so revenues, costs, cash in, cash out, we should be able to repay the loan. This is why we separate the operating part from the financial part. And the account receivable and account payable is what we have between the revenues and the cost, between the revenues and the cash in, between the cost and the cash out. The theory behind is that through the revenues and costs, and therefore cash in and cash out, we should generate cash to repay the debt holders and to offer a return to the shareholders. This is why we separated the operating part from the financial part. Okay? And in this case, in this moment, the company has not invested money yet in the business. Okay? And this is a sort of flow analysis instead of a stock analysis. Using the financial reformulated balance sheet, you use a stock analysis of the company. With the managerial balance sheet, we use a flow analysis. So if I have to explain the reformulated balance sheet here, we start saying, okay, this is a company that has not invested money in the core business at the moment, because the investment in the core business has been covered by the delayed payment with the suppliers. Okay? The company has not net debt, because it has more cash than debt. And therefore the company can repay the debts at the moment if they want. Because I can write cash and cash equivalent 10,000 and loan 9,000, or I can repay the loan using 9,000 here and have only cash and cash equivalent 1,000 and equity 500. The company has not financial debt. It is not in financial trouble at the moment. Probably the company will use this 10,000 to make some investment. And through the investment and the revenues, the company is able to repay the accounts payable and able to repay the loans. A completely different picture. Because we change the perspective of the analysis from a static view, the first one, to a dynamic view, the second one. Okay? We will continue on Monday with the finishing the reformulation of the balance sheet and starting with the reformulation of the income statement. Okay? See you next time.